The tax payable under the provisions of subsections 3 and 4, 5 of the Integrated Goods and Services Act under reverse charge of IGST. He should be in possession of tax invoice, he should have the tax invoice, or he should have a debit note, then only is eligible to claim the input tax credit. No input tax credit will be allowed if depreciation has been claimed on tax component of a capital goods. Warm welcome to 6M B.Ba students. The subject we are discussing, Goods and Services Tax. Unit 4, what we are going to discuss in today's session, the topic is input tax credit. I am Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram, First Grade College, MYSURU, Temple of Excellence. In today's agenda, we are going to discuss about input tax credit meaning, the eligibility, manner of distribution of credit of ISD, that is Input Service Distributor, utilization of ITC as per section 49, ITC availment utilization under revised model of GST. This is a major concept what we are going to discuss, and is compulsory for the examination point of view to understand. You may get almost 15 marks to 20 marks questions from this unit. So go through that one and clear paper without any hurdles. First, let us know what is the meaning of input tax. Input tax means taxes paid on inward supply. What is input tax? When we are purchasing any goods. See here, when we are purchasing goods, we are going to pay tax. In the same time, when we are selling the goods, we are going to collect the tax. So input is nothing but here, input is nothing but the taxes paid on inward supply. Means when we purchase the goods, at that time, we are going to pay the tax. For that reason, it is called input tax. When the goods are purchased, we are paid the tax. Okay, that tax has to be adjusted when we are going to collect the tax from the consumer. That is nothing but whenever we are going to sell any goods here, at that time we are going to collect the tax from the consumer, and those tax whatever we are collected from the consumer, that has to be adjusted with the input tax. So adjustment or set off or whatever the things we are doing here, that is called input tax. Credit benefits we have or not, whether I have to pay to the government or any excess money is it, that can be adjusted in the furtherance of the business. Section 2 subclause 62 of CGST Act defines input tax as input tax in relation to a registered person. See here, it is only for the registered person. Means central CGST, SGST, IGST or UTST charged on any supply of goods or services both made by him. It includes integrated goods and services on import, the tax payable under the provisions of subsection 3 and 4 of section 9 under reverse charge of CGST Act 2017. So now they're saying that when we have purchased goods, either it may be intra or inter. If it is intra, then we are paid for CGST and SGST. If it is inter, we are paid for IGST. There's a thing we have to understand when we purchase the goods, whether it is within the state or outside the state. Within the state, intra. Outside the state, inter. When we purchase the goods, we are paid the tax to the government for purchasing either raw material or anything for the process of production here. After conversion of that one into finished goods, when we sell that one to a consumer, ultimate consumer, we are going to collect the tax from the ultimate consumer, and that amount should be adjusted with already tax paid at the time of purchases. The tax payable under the provisions of subsections 3 and 4, 5 of the Integrated Goods and Services Act under reverse charge of IGST. They are saying that one, the same concept is for IGST also. The tax payable under provisions of subsection, this is related to reverse charge of SGST. Already I have clearly explained CGST, SGST and IGST. And here UTGST, the same concept here. Again, if any goods are purchased in the union territory, so then the tax paid for the UTGST at the time of purchasing good, that can be adjusted when we are selling the goods, and when we collect the tax from the consumer, whether I have to pay full amount of tax collected or whether I can adjust that one with the tax paid already to the government. Next, eligibility. Only registered person is eligible to claim input tax credit. He should be in possession of tax invoice. He should have the tax invoice or he should have a debit note. Then only is eligible to claim the input tax credit. He should have received the goods or services or both. Means when he wants to claim for input tax credit benefit, either he should have been purchased the goods or the services, he has taken the benefits of services, or both. Then only is eligible to claim the input tax credit benefit. The supplier should have actually paid the tax charged in respect of supply to the government. What they are saying that when we purchase the goods, purchase of goods from A, I am purchasing goods from A for 20,000 and he charged GST at 18%. That is CGST and SGST 9%. So 9% on 20,000 will be 1,800 and 1,800. So I paid here 3,600 GST. What is the amount I paid to Mr. A? I paid to Mr. A for CGST 1,800, for SGST 1,000. Total amount I paid 3,600. Mr. A should have remitted this one to the government. Means the amount whatever he collected from us, that has to be paid to the government. Then only I am eligible to claim the input tax credit. If Mr. A has not filed or if he has not paid that money to the government, I cannot claim that one from the government. So we should be very careful whether the amount whatever we have paid at the time of acquisition, the supplier or the service provider should pay the GST collected from us to the government. So then we are eligible to claim that one as the input tax credit benefit. He should have furnished the return under section 39. Means he has to file the returns as per the section 39 of GST Council 2017, whatever we have here, as per the norms they have to file, and then only we are eligible to claim any benefit under input tax credit. When goods are received in installments, ITC can be claimed only when the last installment is received. They're saying that when Mr. A, we are purchasing goods from Mr. A. Mr. A said that when the 50,000 units in the month of January, February, March, April, May. Every month I'll send you 10,000 units. Every month I'm going to send you 10,000 units. Every month I'm going to send you 10,000 units. They're saying that when the goods are received on installment basis here, I can get the benefit at the after receiving the last installment only, not in the initial, or the GST cannot be claimed on installment basis. Only after completion of the transaction, what we are going to call in the accounting term, transaction has to be completed and the process of payment should be made and the supplier has to pay the tax to the government, then I can claim the tax benefit from the government. No input tax credit will be allowed if depreciation has been claimed on tax component of a capital goods. They're saying that if any capital goods are there and if you have claimed any depreciation on such capital goods, then we are not eligible for input tax credit benefit. Like for example, we have purchased the furniture, or that furniture, if I have claimed the depreciation on that furniture under Income Tax Act, so then I'm not eligible for the input tax credit benefits from the government. Where the goods against an invoice are received in lots or installments, the registered person shall be entitled to take credit upon receipt of the last installment only. Already I said that one. Only after getting the last installment only, he can claim the input tax credit, not in the before, whenever he makes the transaction in the part of the business concept, sending every month 10,000, he cannot claim for every month 10,000 on installment basis. Only after the final installment, a lot is sold or received, then only the ITC concept will come into the picture. The payment should have been made within 180 days from the date of issue of invoice. They're saying that one, as per GST norms, what we have here, when the invoice is raised and when we are going to mention in the invoice, like for example, in the previous I said, well, this is a 3,600. When I mentioned 3,600 in the invoice on 1/1/2023, so the amount should be paid to the government. The payment should have been made within 180. Means the payment should be made before 30th September 2023. So if I paid that one before 30th September 2023, then the claim can be made. If it is made in the month of October or November, we are not eligible to claim because it is more than 180 days. So if you want to claim that one, the supplier has to pay the tax to the government within 180 days from the date of invoice raised. Next, manner of distribution of credit by input service distributor. That is nothing but from the head office to the branches. Either it may be services or goods. The simple concept here, branch turnover divided by total turnover into GST paid. This is the formula what we have to apply for the input service distributor. The credit, how it can be distributed. So whatever the amount paid by the head office, total amount will be paid by the head office on all the turnovers, and it gets the input tax credit benefits here. That benefit can be adjusted with the turnover of each and every branch or head office with the calculation in this format: branch or head office turnover divided by the total turnover including branch and all head office and all the branches into total amount of GST paid. So now this is the formula is there for the manner of distribution of ITC for the ISD. Input service distributor under section 20 means office of the supplier of goods or service or both. That is nothing but head office. It receives tax invoice issued towards receipt of input service. Head office is going to get the invoices issued towards the receipt of input, whatever the purchase we are making and whatever the amount we are paid for the government. Such office distributes credit ITC for input services among suppliers having the same PAN. Means the branches is going to have the same PAN or other things that can be distributed. The said office issues invoice for the distribution of the credit of ITC. The head office is going to issue the distribution of GST already paid to the government with the branches. Utilization of ITC under section 49. GST is a dual concept system composed in two rates, that is CGST, SGST. On every transaction within a state, CGST is collected, SGST is collected, and whenever a sale is made within the union territory, CGST and UTGST is applied. In case of interstate transaction, IGST is applicable. They're saying that one within state means it is called intra, means CGST and SGST. Within union territory, so then it is called intra, that is CGST, UT, GST. If it is inter, that is outside, then IGST. So this is the concept what we have here. Dual concept means CGST, SGST, CGST, UT, GST. That is the concept what we have here. Either only central government is going to collect when the transaction is taken from one state to other state. If it is within the state or within the union territory, that is nothing but CGST and SGST, CGST and UT, GST. Now, utilization as per the revised model, what they're saying that. The CGST, the credit of CGST to be utilized sequentially, the first preference, the same with the same, and if anything is remaining with the IGST. What they're saying that one, the CGST benefit credit, whatever it is there, that can be adjusted with the CGST payment, and if anything excess is there, that can be adjusted with the IGST. Same for SGST, SGST with the same SGST or with the IGST. Now, IGST, whatever we have here, this can be adjusted with the same IGST or CGST or SGST. First is for integrated, second for central, and third for state. Here, first for central, second for integrated. Here, for the state and for integrated. Cross utilization of CGST and SGST is not permissible. Means this and this cannot be adjusted. Only it can be adjusted with IGST, not with the other part here. So now, this is a concept what we have under revised model law as per the GST Council 2017. Let us solve a problem here. Input tax CGST we have 7,500, SGST 7,500, IGST 90,000, output tax 69,000, 69,000, nothing is here. What is input tax and what is output tax? This is tax paid at the time of purchase, tax collected at the time of sales. At the time of purchasing any commodities, when we pay tax, it is called input tax. And when we collect the tax from the consumer, it is called output tax. That is nothing but at the time of sales. So, at the time of purchase, we have paid the tax 7,500, 7,500 and 90,000. And output tax, we have collected 69,000, 69,000. There was no any interstate sales. Only we had intra. So now, the sale at the time of sales, whatever we collected, that will be adjusted with the purchases. Let us solve the problem here. The tax what we collected at the time of sales was 69,000, 69,000, and already we have paid to the government at the time of purchasing of goods here. For IGST 90,000, 7,500, SGST 7,500. So we have paid tax here and we have collected tax. What is the remaining amount I have to pay to the government means 61,500 and 69 minus 7,500 is 61,500. 69 minus 7,500, 61,500. Now, whatever the input tax credit we have here, the amount paid for the IGST, this is adjusted with IGST. So there is no amount available here. This cannot be set off. So we have the availability at CGST 61,500 set off from IGST, the 90,000, whatever we have here, the 90,000 is adjusted with CGST, the full amount, 61,500. Out of 90,000, 61,500 is adjusted. Remaining will be 500, 8 to 28,500. That will be adjusted with the SGST. The first preference will be given for IGST. Nothing is available. The second preference for CGST. Whatever the amount we have, the full amount will be set off. And the third one remaining with the SGST. Now, the tax payable we are going to calculate in such a way that 90,000 plus 90 and minus 90 is 0. Nothing is here. 61,500 minus 61,500 will be 0. 61,500 minus 28,500, remaining 33,000 I have to pay tax to the government. That's it. Not I have to pay here, like for example, 6969, 1,38,000 I have collected from the customers, and already I have paid tax here 90, 1,05,000 already I have paid to the government. How much I have to pay remaining? 33,000. This is the thing we have calculated here. We have collected 1,38,000. Already I have paid 1,05,000. The remaining should be paid here. In the normal calculation that can be made easily, whether my answer is right or wrong. So we can check here easily. We have collected 1,38,000 and we have paid 1,05,000. The remaining should be paid to the government. So this process is called input tax credit, whatever benefits we have received, and we can set off that one with the same collection process or with the central or state. So IGST's balance can be set off with IGST and CGST, and the remaining with the SGST. This is a process what we have. If we have excess amount in the CGST, with CGST or IGST, that's it. This cannot be set off with the state government. The state government, if it is having excess, then it can be set off with the state or IGST and not with the CGST. This is a process what we have. Understand properly. Next one. Purchase of input rupees 11,50,000 plus GST is 18%. Capital goods 28%. Audit fees, health insurance, market research. Now we have to identify what is the, if he is a registered person and not a registered person, then what he has to pay the tax. If he is a registered person, then purchase of input GST at 18%. So 11,50,000 into 18%. The input tax will be 2,07,000. I've paid here. So entire amount is eligible for ITC benefit, input tax credit benefit. For purchase of capital goods, I have not claimed depreciation here, so I am eligible for the tax 8,40,000, whatever I have paid here, 8,40,000 tax paid, that can be taken benefit. And next, audit fees, whatever the charges they have collected from us, for that I have paid 21,000. This 21,000 is eligible for input tax credit benefit. Health insurance, the 12%, whatever we have paid for the employees, 19,200. This cannot be claimed as the ITC, but there is no eligibility benefit for ITC. Market research service, the amount what we paid for the 9,000 for the purpose of business year, 9,000 is eligible for claiming input tax credit benefit here. So totally 10,77,000, whatever we have here. Out of that, see, 2 lakhs, 8 lakhs 10, 1047, and 21 year, 1047, 1048, 10 lakh 68, 10 lakh 68 plus 9, 10 lakh 68 plus 9 will be 10 lakh 77, 10 lakh 85, and 10 lakh 95. Out of this, 19,200 is not eligible here. The remaining 10 lakh 77,000 is available for input tax credit benefit. If he is not a registered person, then no input tax credit availability will be given for the people. I cannot claim input tax credit benefit if I'm not registered under GST Council. In the upcoming session, we are going to discuss about input tax credit and the problems on ITC and the ISD concept, that is input service distributors, adjustment with the head office and the branches, whatever the amount paid by the head office, that can be, benefit can be taken by head office as well as all other branches. How to calculate that one, we are going to discuss in the upcoming session. Thank you and namaste to all 6th BBA students. This unit is very important. Go through that one and understand. Compulsory questions will be there. 2 questions will be there for you people from this unit. Go to that one and enjoy yourself. Thank you and namaste once again.